Good morning, everybody. It's Thursday, 2nd of August. My name is Sarah Louise, and you're watching Axiory's news broadcast. Let's start with Axiory's technical outlook for the euro dollar. Price fell below daily pivot and now is approaching this level for retesting. If it rebounds, we can expect decline towards S1 support, and further fall will subsequently focus on S2 support. On the upside, break above daily pivot will confirm upward movement and price will target R1 resistance. Based on the conclusions for each indicator and chart analysis, we are expecting a bearish trend today. After that, according to our outlook for the dollar-yen, price is rising towards resistance R1, where a new high will probably be formed, and subsequently we can expect correction towards daily pivot. But further rise above resistance towards R2 hasn't been excluded yet. Decline will be confirmed after price falls below daily pivot. A vast majority of our indicators expect a bullish trend today. Next up, the sterling dollar's outlook. Price will probably rebound from S1 support and then approach daily pivot. On the downside, if price isn't able to break above daily pivot, it will probably retest support and further fall towards S2 support isn't excluded. But sustained rise above daily pivot will confirm objective at R1 resistance. Based on Axiory's chosen indicators and chart analysis, we can assume a bearish trend today. Finally, our outlook for the dollar franc. Price is falling towards daily pivot, and decline below this level will confirm further fall. In this case, target will be at S1 support or slightly below this level, and we are expecting rebound from this level. Subsequent correction could turn into rise eventually, but if price rebounds from daily pivot, it will negate previous conclusions and target will remain at R1 resistance. The vast majority of our indicators and chart analysis in the dollar franc show a bearish trend today. Today's first news concerns about retail sales in Switzerland, with a high impact on the sterling, released at 8:15 a.m. GMT. Analysts are expecting that sales will rise only 2.8% compared to previous 6.2% rise. Next, we have three UK news with a high impact on the sterling. First news will be reported at 9:30 a.m. GMT about construction PMI, which fell in the last survey to 48.2 points. Analysts expect that the figure will remain unchanged and it will continue indicating contraction in construction. At 12 a.m. GMT, UK asset purchase facility will be released, which is expected to remain at £375 billion, and after that, also Bank of England is going to publish figures about official bank rate, which was at 0.50% last month. Analysts are expecting it will remain at current level of 0.50%. In addition, ECB is going to release their numbers about minimum bid rate at 12:45 am GMT, which is also expected to remain unchanged but at higher level of 0.75%. This news will have a high impact on the euro. And Thursday's last news, also with a high impact on the dollar, will close regular figures about US unemployment claims released at 1:30 p.m. GMT. Economists expect decline in jobless claims and increase from previous 353,000 to 375,000 people. And before we finish, Axiory brings you a short overview of the best traders on Axiory. According to the T-score order, Teo strategy moved to first place with 175.3 pips, while Glimpsey fell to second place with 674.9 pips. At third position ended APS GTS1 strategy, which declined to 441.0 pips. Low-risk invest is holding at the top of multi-trader board despite losing 1.32%. Indie Arrows was able to remain at second place with 23.50% in a monthly gain and hasn't changed since yesterday. But FX multiplier continued in decline and recorded loss 2.77%. LW Trading remains first with 3,572%, followed by JCB FX Trading Strategy, which recorded rise 3,461%. At third place is now TK Trading with 1,143%. And on this date in 1776, the United States Declaration of Independence was signed. Thanks for watching Axiory's news broadcast. Have a great day trading, and I'll see you tomorrow. Bye bye!